Hey guys, my name is Mike, and I am making my first content video for investing, collecting, and my main goal here is to give you insight into the market. Let's get a little quick background on myself. I have been collecting since I was 8. I probably was collecting at the worst possible time that you could collect for baseball cards back in the early 90s. All the players I invested in was during the steroid era. So most of those cards ended up being basically worthless. In addition to that, market was flooded with oversupply. Just not a great time to invest. But I started working at a card shop when I was 10. I love it. More broadly speaking, I have a passion for investing. I went to college. I got an economics degree. Ended up working at Goldman Sachs, JP Morgan, a couple of other big banks. I traded stocks. I went through commodities, mainly precious metals, some energy, as well as FX. And I've also been an equity guy. I was a sharpshooter on a couple of my teams, picking single stock ideas and just trying to be value add to my team and any client coverage that we had. Also, you'll notice I don't have a fancy background. I don't have a whole bunch of Pokemon stuff. That is my main goal here, to give you color on Pokemon. I have not been in the business that long, but my hope is to give you information that's not already out there. What do I mean by that? Well, I've watched countless YouTubers. The market is saturated with all kinds of ideas on how to invest, collect, business ideas, you name it, it's out there. I'm happy to have a conversation offline and give you some of my thoughts on the best YouTubers to watch for your specific strategy. But for me, here's my hook, man. We all know that this giant printing facility is going to be coming online relatively soon. And the main theme that I've heard from YouTubers is we really don't know what the impact is going to be from that facility. The general thought is it's going to be negative. But let's dive into that a little bit. I don't want to go too specific. If I really wanted to put my analyst hat on, my Wall Street hat, I'd go look up, if I could, see how many facilities are out there, what their annual output is, and then just kind of do a quick math, back of the envelope stuff, and guesstimate kind of what the additional output might look like from that new facility. But here's the thing. So, sets like prismatic evolutions, destined rivals, really anything that falls in that window historically of potentially being a reprint set, is it could be a big gamble, or it may not come to fruition like people think. So that's why people keep saying it's an unknown variable. I disagree with that. I think it is definitely a known variable. And to be specific, what I mean by that is I think you should be looking at anything that's in the earlier phases of Scarlet and Violet or prior to that. So think Sword and Shield, etc. Could you continue to invest in Prismatic Evolutions and Destined Rivals? Two of the hotter sets that people are mentioning to invest in 2026? Absolutely. Am I doing that? I have been. However, I kind of had that light bulb moment where I'm like, well, wait a minute. Others have recommended maybe go heavier into Sword and Shield. Those aren't going to be reprinted. That's very, very unlikely unless Pokemon, decides to do something abnormal or outside of their historical, blueprint for printing cards. So, we all know that there's two things. So people trade markets, right? It's not like the prices go up and down magically. Those are real people making decisions. And usually you also want to focus on trends. And right now, we all know we've been in a boom. Obviously, the last quarter of 2025 was not great. We saw a dip in the market. Plenty of people were out there saying to buy cards. And that was the right call, buy the dip. Very similar to trading the stock market right now. We've been in a cyclical boom since basically 2010. And obviously Pokemon has not been in a boom since 2010, but it's been consistent. And more recently, in the last 5 to 6 years, we have been in a boom. So the thing about trends, guys, is you don't want to fight a trend. So if you're trying to, time the market, get that high tech, sell all your collectible stuff at the highs of the market. Nobody really knows when that's going to be. I've myself have fallen into that folly where I've tried to time market downturns and I've gotten burned. As they say, the trend is your friend. So I don't see any reason to stop investing right now in Pokemon. So with that being said, you still need to be diligent, do your homework, and be smart about it. And for me, I think, again, knowing that this big print facility is coming online soon, things like Ascended Heroes, for example, there have been plenty of YouTubers that say wait 6 months. That's been a pretty clear trend, right? All these new sets come out. Look at like Phantasmal Flames, for example. Things started off really hot and they've fallen pretty hard since. I think that's going to be the case for Ascended Heroes. That's nothing new. You've heard that before, but I think it could be worse than people expect. Even though I think it's a great set, I think there's a lot of long-term value. I think you need to be patient on anything that's, been printed last quarter, and anything really through the next, call it 12 to 24 months. So when you talk about that, you're kind of looking at maybe Prismatic Evolutions as falling into that window, and anything before that, you could make an argument as, being value add to collecting that. And a little quick tangent here. I am not going to edit this. This is just speaking from the heart. I'm new to this. As I grow, I'm probably going to shave the beard, look more presentable, have the cool Pokemon stuff in the background to make myself look more professional. But my hope is that you see a guy who's invested his whole life. In fact, when I did my ancestry lineage, I noticed going back as far as I could, I come from a long line of merchants. In today's modern language, that's basically being a broker and or dealer. So it's literally in my DNA to, collect something or try to broker something. That's what I did on Wall Street. Again, passion. And, if you take anything away from this video, try not to fight the trend in the market. I think that things will continue to go up. Obviously, things can literally change overnight, but historically, that's usually not the case unless there's a major catalyst. And we've touched upon a potential catalyst, and that is that printing facility. I think that, again, whole herd mentality with YouTubers, people are saying we really don't know what the impact's going to be from that. Well, we kind of do. It's a big freaking facility, and it's definitely going to put a lot more supply in the market. So I do think that those sets, again, Sword and Shield, earlier Scarlet and Violet, and stuff before that, is probably a better place to put your money. I personally also believe that collecting sealed product is the best way to go. Another thing that's working against me is I don't have a distributor. I have called and tried to reach out in the contact forms profusely, trying to establish a relationship. Apparently, $250,000 is chump change, and I get that. Again, Wall Street guy here, that really is not a significant amount of money. But having been on the sell side, where I'm the guy, the distributor guy, who's trying to manage the buy side, again, card shops, people that are buying inventory continuously. You got to look at the long-term picture, long-term greed, as we say. First thing I learned at Goldman Sachs, long-term greed. But I think they're looking at it the wrong way. I know a lot of new cats are coming into the business, but if I'm that guy at the distributor and I'm getting flooded with stuff, it doesn't mean that I should ignore it all. I would want to go in, I'd want to look at the pitch, see what maybe value add there is to each individual story, and at least have a conversation with somebody like me who's mentioned, hey, $250,000, but I'm willing to work with you and grow with you. I'll speak more to that maybe in another video, but what I wanted to come across today is, kind of looking at how to trade markets. That's what I'm good at, collecting and trading and investing in markets. And there's a lot of crossover and really any kind of type of investing, regardless of what the asset class is. And I don't think that Pokemon investing is that much different than, say trading any kind of other asset class. So with that mindset, again, having lost a lot of money and made a lot of money in investing, don't fight trends. We know what the trend is right now. Look at potential catalysts that could affect the trend. We talked about the printing facility. Obviously, stuff like a potential recession, maybe tariffs come back into rotate back into people's mindset, and really anything that could be negative on the broader markets. Again, there is a lot of correlation, and you'll hear this from other, YouTubers that focus on specifically investing about things like, oh, Bitcoin's down, that's going to impact, people's purchasing power. They're going to potentially buy less. That it's not just Bitcoin, man. It's really anything, that's in people's portfolio. If asset classes are getting hit because of macroeconomics, specific things that you fall outside of Pokemon, but will still correlate and affect prices in Pokemon, you need to be paying attention to that stuff. Um, you know, Things like a solid entry point, very important. And again, I know most of you understand that. I do think it's possible, having watched, I really don't know how many hours I've invested at this point, a lot, a lot. Trying to hear other people's thoughts, but supply matters. So when you look at maybe investing in a mid-tier set in Scarlet and Violet, the earlier stuff, or Sword and Shield, and the volumes, not that much, you have to be cognizant. If again, this is just for if you're investing and you're trying to hold it for a couple years plus. And again, things can change obviously over a couple years, but if the volume is pretty weak compared to something that's more liquid and is trading more often on a weekly basis, you need to be considering that type of stuff, because if you accumulate a really large position, let's just say you have a hot take on a specific set that you really have fallen in love with, you feel like you have an edge on, you need to be thinking about your exit strategy, even if that's a few years down the road. What does that look like? And is there going to be liquidity to take you out of your position? Because God forbid, if something happens and maybe you over lever yourself, or you put a really concentrated position on, and let's just say on paper it's profitable, getting out of that position could be difficult, especially for someone like me who, I haven't built that community yet. I don't have those phone calls where I have a bunch of millionaires on speed dial, or other card shops, what have you, that can maybe take me out of my position in just a couple chunks. So all those things should be in your mindset, but start with what the trend is. Think of what catalyst could be to hurt your position. Definitely consider things like liquidity and each position that you're taking. Again, for those not familiar with that vernacular, liquidity is just simply the volume, the average amount of transactions that occur on a weekly basis for any of those positions. So I personally believe in sealed product. I did go through the phase of opening packs, and I got the average pull rates. And if you get the average pull rates, everybody knows you're not going to make money, man. Unless you hold them, or something again specific happens to a specific set or card, something could blow up. It could work in your favor. But odds are, if you're just ripping packs and you're hoping to be profitable, that's not going to work. Most of you know this. So you got to come up with a strategy, what works for you. You got to make sure you don't over leverage yourself. You got to think of things like overhead. Again, a lot of great content on how to start a business, coming up with a business strategy, really how to execute all the X's and O's that go into starting a business. If you're like me and you're trying to build, I do believe there's a couple great content out there about, you got to build a community, got to get that content out there, and you got to differentiate yourself and make your content valuable to watch, right? So for me, my hope and my aim is to kind of put a peek behind the curtain, so to speak, of what I'm accumulating, what my thoughts are and why it's going to go up, potential headwinds that could affect that investment, and tailwinds. So right now, again, just to recap, so I don't go too long on my first content video, I'm looking at market trend. Market trend seems favorable, has been favorable, caught a lot of the old guard off guard. Sorry for the weird language there, but and they thought that this boom that started back around the COVID times was going to end within a year or two. There's a lot of videos, if you go back and look, they're like, oh, this is going to change in a year or two. Well, it really hasn't, right? And that's kind of how trends work. Nobody knows when that trend is going to reverse. If you're looking how to get better at investing, I do have a recommendation. Again, this is me trying to differentiate myself, having spoken to a lot of hedge funds. The whole thing about trading, guys, is it's about market psychology. Because what creates a trend? People. So right now, people as a collective are assuming that these Pokemon as a whole is going to continue to go up, at least for the next year. And that's great. You want to be understanding what other people are thinking because you want to be part of the trend and not fighting it, right? So be cognizant of that. And there's this, it's called the Van Tharp Institute. And what it is a specific course on how to make you a better investor. And what it really focuses on is your mentality and how you approach investing. And I'll use a stock analogy. Say you're a day trader. Well, day trader can mean a lot of different things to a lot of different people. Maybe you trade 5-minute intervals. Maybe you trade hour intervals. And then you could be somebody who trades, monthly intervals or half-year intervals. You're a long-term thinker, say it's a year plus. But the point is, those are your natural bias of how you invest. And that's really important as you consider collecting, is kind of figuring out your strengths and weaknesses and your psychology as you approach investing. Another thing, I found myself being a permanent bear. Why? I went into the market when I started in '04 trading, obviously having gone through the Great Recession, it always kind of felt to me like the market was going to reverse. I couldn't have been more wrong. It has gone up, 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 up since 2010. So trying to fight that trend has taught me some, harsh lessons. But the point is, had I known myself a little bit better, had I taken these courses and figured out I do like to day trade, and I actually like to day trade 5-minute intervals, in and out of positions quickly. And I had to find a methodology and a proprietary, system that fit that approach. I also had to think to myself, what are my pitfalls? Again, I have a biasness against the market going down. And I need to be aware of that as I continue to invest in whatever product. And it goes on. It talks about position sizing. Position sizing is a big deal. I'll give you a specific example. Let's say that you go out and you buy a system that's right 99% of the time. Well, okay, that sounds great, right? Here's the problem with that. If you don't have discipline and you don't follow the exit strategy of that system, it might be right 99% of the time, but you got to know what that really means. Maybe it's right 99% of the time over 5 minutes, and you're a guy that trades 15 minutes. So you're going to perpetually not be able to monetize and realize profits because you're not following the system correctly. Conversely, and I'm giving you extreme examples here, if you have a system, I'll call it a home run hitter, that's wrong 99 times out of 100, but that one time is just a banger. It's right, and it's right in a big way. Well, you got to learn to minimize your damage and exit positions that either are kind of just treading water or just maybe even going down, not working well, so that you can continually prepare yourself to position for something that fits that formula so that you're in, and you're in a big way, and you're profitable, and you take advantage of that 1% hit rate. Because again, that can work. So that's been a big folly that I have seen from people when they invest. They go out and they buy this black box formula that's glamorous. It's got 80% success rate, and they still fail because they don't know how to really understand how to take advantage of that 80% rate. What goes into that? And that's about your position sizing. So that's another thing I will touch upon too, is how to diversify. I will try to give you multiple ideas so that you're not too heavily concentrated in any specific position. And to each their own. If you have, I'll just throw out evolving skies, because I've seen that so many times in the content I've been watching over the last half year to a year. It's done great, and maybe you're a huge believer in that, and you have a view that thing's going to be 10,000 for a booster box in a year. Well, if you have some reasons behind that, you have some catalysts that could see that come to fruition. And you kind of really feel like you understand the market psychology and the trend there, maybe it is going to work out, and you should invest in things that you've done your homework on and you believe in, and there's thought behind it. If you're buying it because you think it's just going to go up because people are telling you it's going to go up, that's probably not going to be your best investment strategy. Again, everybody's different. My hook again is to try to give you insight that's maybe out there but hasn't really been delved into, in a significant way. We've talked about the printing facility. Now we've talked about the market liquidity, market trends, kind of my background, how to invest, your strengths and weaknesses as a person, this whole accumulation of all the things you should be thinking about when you invest. For example, I mentioned that I'm a sealed guy, but I also, when I first started, was ripping packs. I still have that pull, because I have a love for cards. I love Pokemon, and I want to go open those packs. As time goes on, I need to see what my discipline looks like. I keep using that word discipline because it is literally the definition of making or breaking your investment, success. So if if I find myself, I can't help myself, and I'm sitting here opening up sealed product, which I know is not a good idea, right? It's really not. You're probably not going to be that one lucky guy that pulls amazing hit rates. If I find myself doing that, I'm going to have to pivot to a new business strategy. But for now, I'm going to do my best to stick to my guns, my discipline, and collect in the right way, follow that strategy. And my hope is also, I heard this from a lot of content providers as well, you can't confuse your business model with your collection or investment mentality. Those are two separate, thought processes that you need to differentiate. So if you're murking the waters and combining those, one example that was given is say you believe in prismatic evolutions, and your thought is, I'm going to buy that and I'm going to resell it because I have a great distributor and I can get it and I can flip it for a 20-30% profit. I'm not scalping too bad. It's a legit, transaction. But then you're like, oh, well, hold on. Let me take 25% of it or 50% of it and set it aside because I think that's going to go up in value. Most of us don't have the capital to do both, to invest and have a true business. People use the term generational wealth accumulation. If you really want to be successful in a significant way, you need to build a brand. You need to be able to have a market strategy for your business that works, and you're constantly churning out product and making your 15 to 30% profit. And as you grow and you can set some dollars aside, you can invest in a collection, but you can't murky the waters. It's the same thing if you work a 9-to-5 job. You're supposed to be investing a certain percentage of your paycheck into your 401k. And in an ideal world, not just your 401k, you're setting aside dollars to invest potentially in a brokerage account too, so that you're investing for your future with the thought being that you're going to hold that for the longer term horizon. And there's nothing wrong with that, but first you got to have the money to be able to do that. If you want to hear more content about my thoughts about how much money you need to start, all that good stuff, I'm happy to provide it. I realized I've now spoken for 23 minutes. Again, my appearance isn't great. I'm going through some health issues. I'll get myself cleaned up as I go down the road. I'm in the process of moving. Probably can't see you can see one box, but this whole room is just filled with boxes. And when I get settled, I hope to provide some more content. But if you do think that I'm interesting, I would love if you could like this video and subscribe. That would be great. Let people know there's a new guy in the scene. He's got some different thoughts in the market. But yeah, man, again, economics guy. We're looking at trends. We're looking at liquidity in the market. We're looking at catalysts that could move products one way or another. Those are all things that I hope to provide. Those are all things that have worked for me, covering some of the best hedge funds on the planet, and money managers like the BlackRocks, the Fidelities, some really prestigious hedge funds that you see on the talking heads on CNBC. What they find the most interesting is not like, oh man, prismatic evolutions is going to go up, you should just go buy some. And I'm like, dude, I've heard that from 90 other brokers. Why is it going to go up? Oh, well, it's got some great, it's got difficult pulls and it's got some great chase cards, and that historically has meant evolving skies, it's going to go up in value. There's some truth to that, and that might actually work as an investment thesis. But if you can go further and you can say, well, I do like prismatic evolutions, but this print facility, having done the homework, and I see that Pokemon has all these, facilities throughout the world. These are the ones that focus on English, printing cards. This is what their output is. This facility is X percent, in proportion to those other facilities. So I think it's a good, reasonable assumption that it's going to have this X impact on the, this much more supply. And prismatic evolutions does fall into the horizon historically of being in a reprint. Maybe we hold off, maybe we wait. The flip side to that is if you're a gambler and you were a risk taker, if prismatic evolutions reprints, some of the more off the run products within the set, you still might be golden and you took a risk and it could pay off handsomely. But I don't think that risk is necessary right now. I think there are better opportunities. And again, I have a big position in prismatic evolutions. In hindsight, that might have been a little bit of a mistake. I'm learning, guys. I should have been a little bit more thoughtful about that and considered the printing facility and the damage that could do to my position. Same thing with Destined Rivals. It's going to have an impact. Let's just put it that way. It's not going to be minimal. That doesn't mean that things aren't going to go up. But if, let's say, and I'm making this up, let's say it goes up 50%, but some X set in Sword and Shield or earlier Scarlet and Violet goes up 250% over the next 6 to 18 months, whatever it is, that's opportunity cost that you've now lost. So be thinking about the catalyst that could affect your position. And even that can include what you think is going to, potential geopolitical events, potential, monetary events via the Fed. It can be a lot of different things that could affect the economy, which in turn is going to affect people's purchasing power, which again is going to affect, how many cards are bought, which will lead to an overhang and oversupply, and that will lead to a price drop. Similarly, if you have a view that there's some catalyst down the road that the market is actually going to get hotter, well, then you should be investing in pretty much everything. Obviously differentiate between your best opportunities, but diversify the whole position sizing element that I talked about. And another differentiator I mentioned too is, thinking about the market psychology, and that includes yourself. Like, what are your bias when you invest? Are you like me, a perma bear? You're always thinking the sky is going to fall, and you find yourself hesitant to be accumulating positions, even though the trend has clearly been up. The markets ebb and flow, man. Just because it went down for a quarter, if you look at the overall picture of the last 5 to 6 years, that's pretty insignificant. It wasn't as, the rule of thumb in the stock market is if you're in a bear market, it's down 20% or more. I think the collective was down 25%. So we were in a bear market for a very short period, but since then we've rebounded and we're eclipsing all-time highs again. So, some of that had to do with some reprints. Some of that had to, I could go off into the weeds why I think that was, but in the scheme of things, 25% drop for a relatively short period of time and rebounding so quickly, that tells me that demand is still very much there. You look at people like Kevin, I think it's O'Leary from Shark Tank. He's now setting aside a 5% allocation to his overall portfolio in collectibles. Specifically, he's talked about trading cards. Not necessarily Pokemon. I know he invested in, I believe it was that Kobe Bryant. It was either Michael Jordan or LeBron James. Somebody was on the card with it. It was a big purchase for him and his group of investors. But they're now taking this asset allocation seriously. That could be a catalyst too, guys. I've thought about this myself, starting a hedge fund, an LLC, where I try to accumulate investor wealth and I go out and invest into Pokemon. And pitch being, I have a differentiator and ability to generate profits and alpha versus the next guy. And I think there's some real truth to that. If there are more people like me and they are able to, pull in some funds, get some AUM going, and they're able to invest in a significant way, well, that just means there's more buyers, and that means that prices are going to go up. I do think there's a potential for that. So now we've talked about a couple of catalysts. We've talked about a potential bear catalyst with the printing facility. We talked about a potential bull catalyst in the form of the trend continuing. It's not necessarily a catalyst, it's just a statement. But more specifically, if we get this whole new investor class of actual hedge funds investing in collectibles, and some of them are going to gravitate toward Pokemon. Why wouldn't they? I've seen videos where certain sets are up 18x or 54x in the last 6 years. That's ridiculous. The S&P surely hasn't done that. Even the highest flying stocks, you'd be hard pressed to find a stock that's up 54x in the last 6 years. There are few and far between. Whereas with Pokemon, there are plenty of sets that have gone up 10x. That's still significantly outperforming other asset classes. So that's my goal here. Wall Street guy here, trying to help you invest. as I grow, I hope to learn more, post more content that's valuable, but I hope to differentiate myself with newer ideas, things that haven't been said. I've heard no Pokemon YouTuber talk about catalysts when investing. I haven't heard one, and I've listened to a lot. I'm sure they exist, haven't heard it. I haven't heard anyone delve specifically into how you would break down what that printing facility damage would look like if you were an analyst on Wall Street, and your whole job to your portfolio manager and your team would be, this is the homework on that facility versus the other facilities. This is the damage it could do. Things like that, they're not being said, guys. And I do think that they matter. They matter a lot. If you have questions ever on the vernacular I'm using, because again, learning investment language is a whole nother lingo. If there's something you didn't understand, put it in the comments, message me, whatever. I hope you enjoyed this. Again, I'm not the most attractive guy. You're not going to be clicking on my video because I'm some young 20 or 30 something that's good looking and I just got all this charm and charisma. You're going to be doing it because I'm going to try to make us money. And I hope to get a website up soon. I hope to have some product to purchase from me soon. And I hope to just kind of document my journey as I go. Because again, guy that's been collecting since I was 8. I love this stuff. It's fun. But you need to be thoughtful and meticulous on how you go about it. And there's a lot of different, video content out there on how to do that part of it. I think that's plenty saturated enough. If you haven't found those content providers, again, I'm happy to provide them. And I will start giving some shout outs to the people that have helped me in their content. I will say, almost even if they only have like 5K views, I've pretty much messaged all of them. Not a single one has responded. I kind of find that being a double standard because most of these guys talk about, oh, you got to have a community. You got to build that up. That includes you, bro. Like, you should also be trying to respond to some of those messages. If you see someone that's hungry and passionate and they leave a pretty intelligent message and it's not just the doldrums, is this going to go up? And it's kind of like, that's a stupid question. Like, come on, man, there's plenty of people that can answer that, and you're intelligent with your questions. I think some of those guys should be taking the time to answer because you know what? They could learn something if they had a conversation with someone like me where we could spitball and we could learn from each other. I could provide my strengths and vice versa, and we could grow together. So I hope to be available and be able to do what these others aren't doing, and that's respond. Obviously, if I become like a PokeRev, that's going to be more difficult. If I'm getting millions of views and thousands of comments, it becomes a little bit more difficult. But I hope to be there for you guys. This first video, I've already mentioned, I think 3 times now that it's long. It is long, but it's my first one, man. I wanted you to get a flavor of who I am, what my potential differentiator is going to be, value add to your portfolio, how you go about it. And I do think this covers not just collecting and investing. Even if you're, a card shop or a dealer, if I can give you market color on what I think it's going to do over the next few weeks, quarter, semi-annually, annually, you still can have in the back of your mind, because most of those same people have accumulated enough wealth where they can also have a side pocket to invest. So I do think this should touch pretty much a wide swath of people that follow Pokemon, collect cards, invest in them, resell them. I think there's something there for everyone. So hope you guys like this. I'm around. Thank you very much.